Hello. Happy Sunday. How's everybody doing? Okay, ladies and gentlemen, one more day until we get back to the market opens. Okay, so check this out. In this video, we're going to go ahead and do a mega quantitative analysis on Clover Health. I usually like to do this in between earnings, and sometimes I have to skip it because of my schedule. So we're going to go ahead and do a mega analysis right now. So Quant Analysis is nice because you get to kind of look at the overall general theme of things, red being bad and green being good. And you can see overall, this is kind of, Clover Health when it first started, and you can see kind of where it's now. And you can see there's a lot more red in the beginning of Clover's time. And then you can see now there's especially with the gross margins, you can see Clover went from red to green. And we're going to go ahead and zoom in on this. But first things first, what I would like to do is, we obviously have seen some markedly changes in movement in regards to the stock price. It is now sitting over, you can kind of hover all this, it's sitting over the 250 MA and sitting over the, pretty much all the different types of MAs, right? And we are starting to see some form of stabilization. Interestingly, if we were to look at the volume over the past couple of days, not couple of days, over the past couple of months, we can see an increase in volume that is pretty significant. And I like this because it kind of gives me, 30,000 view over what to expect. And what we're going to do is, we found, that Clover, the last quarter, they were free cash flow positive. Interestingly, not when I say last quarter, I'm talking about March 31st, 2020. Not the most recent earnings we had, which I believe was in May. Correct me if I'm wrong, right? And so that's going to be kind of interesting to see because they did publish those results in May, if I don't recall. So if we can zoom in here real quick and just kind of give it an example of the gross margins, you can see that Clover's gross margins was actually quite negative in the past. And now if you were to kind of look here, you could start to see that they are approaching profitability. So a lot of folks that are, talking crap and talking about, all this negativity, they don't know what they're talking about, right? And I guess that's where the opportunity lies, is when Mr. Market, which is the pretty much reflection of majority of people, interpretations of a company, mismatch the actual fundamentals of the company, you start to essentially get to an area where opportunity lies, which is where the multi-baggers sit. Interestingly, many people see a decrease in revenue growth, which you can see here if we were to zoom in really quickly. But that's because they were shutting off the bad revenue, the revenue that was unprofitable, right? And if you don't recall, back in the day, Clover, used to grow at, over 100% year-over-year growth. So I don't think they're going to get back to that because it was unsustainable, but I wouldn't be surprised if they grow 35% plus, right? So we're going to go ahead and do that. But first things first, I do want to mention that, at the end of the live yesterday, I just kind of typed it. By the way, this is our stock terminal. If you guys want to learn more about it, there'll be a link down below. We have access to a whole bunch of data. I just tapped it in passing, and we got the short volume here. And we can see the shorts have been doubling down, especially on June 24th. On Friday market open here. So interesting to see kind of how the stock price is going to go what's going to happen this week. And I recently got a comment on my YouTube's comment sections, and people are saying, the only reason why Vivek bought was because they don't want the company to delist. No, because they can do a reverse stock split if they want. And if it's true, if that's what they bought, then why didn't they do it the first time the company was under $1? They were actually filing the paperwork for a vote. I think Vivek is showing a sign of confidence, given that they just released a bunch of SaaS and they just did a $20 million share repurchase buyback program. So there's a lot of positive news, but unfortunately, people stubborn. There are people that are ignorant and people that are stupid, and we talked about that, right? You can't fix stupid, but you can fix ignorant, right? But sometimes there's a high probability if you sit in the ignorant camp. There's a highly likelihood that you might just be stupid, right? So what we're going to do right now is we're going to go ahead and open up the help menu from our stock terminal, and I'm going to open up the stock fundamentals here, and we're going to go ahead to next, and we're going to go to the complete quarterly financial reports, and we're going to type in the Clover symbol here. And by doing that, Brain Machine is going to go ahead and give us the data immediately, and we're going to go ahead and open it up. And now this is the data in regards to Clover Health. And on the bottom here, you have income statement, balance sheet, and statement of free cash flows, but from a quarterly perspective. And if we were to go ahead and zoom in really quickly, you can see here on March, we can kind of just make it a little bigger here, make it a bigger font so the world can see it. And if we were to go down here and look at free cash flow, again, we can kind of bold it out, make this a little bigger. You can see that free cash flow is $25 million. Now, there's a couple of things that can happen here. Is this free cash flow going to be continuous for this year? I don't know. But since the, CMS star ratings were 3.5 stars, upgraded from 3 to 3.5 for 2025, then potentially maybe this might be good in conjunction with the SaaS revenue that they said they are going to expect to see the larger sums of. They said they're going to see a little bit of SaaS revenue in regards to this year, but nothing in comparison to 2025. They said it's kind of small. So what I'm going to do is it's 25.49 million, and we could just kind of basically bold this out real quick, and I can just kind of zoom it in here so you can see. So what I'm just going to do is I'm just going to call it 25 million. And if we take 25, again, how many quarters are in a year? There's about 4 quarters, because every 3 months you have an earnings report. Again, guys, all for educational purposes, and nothing here is financial advice. Please do your own due diligence, and always, you are the captain of your own ship. But what we're going to do here, interestingly, is we're going to take this and we're going to say, okay, based off of the last quarter, okay, and we look at the income statement here, and we can kind of zoom in here. Based off of the last quarter, and let's kind of zoom in here, Clover made approximately 346 million dollars. So normally I would type in 5% of estimation of free cash flow, because remember when I do that, so 346, we can type here 346, and you do kind of 5%, we equate it and multiply it, we get 17 million. But the thing is, they have 25 million, so we can go ahead and do 0.07. That's 24, so 0.075. So around 25, right? So we'll just call it 0.07. So you can see that Clover, as of now, without the SaaS, is it's kind of growing around at 0.07, which is pretty good than the 5% of estimated free cash flow. So what we can do, though, we could take this number 25, multiply it by 4 quarters, and we get essentially $100 million in free cash flow. We can then go to our intrinsic value calculation, part of our Mastering Stock Market course, and then we can then go ahead and go to the light mode here, and then go in and type in $100 million in free cash flow, right? Go 10 years into the future, and then we're going to go in and do 496. Now, the question is, if we were to grow it right now at 8%, you can see Clover's anywhere between $1.36 to $3.96. And I hope that maybe this may have solidified it with Vivek purchasing, but this may recessionary $1.36 may be the new low. But again, guys, this is growing at 8%. They did say that they're going to be returning to growth when others are retreating, and others are retreating, and we have verification of that. So I think, are we going to grow at 160% like we did back in the day? No. But are we going to grow plus 30%? Well, if we go to here and go to Alignment Healthcare is growing approximately 43.14%. And if we go ahead and go to Oscar Healthcare, look at Oscar. Oscar's growing around 45%. So I'm going to do essentially, what I think is going to grow 35%. Then we'll do 43% for Alignment, and we'll then go ahead and do 45%. So we'll do kind of 3 different growth rates to see kind of, where could Clover go, right? And again, this is $100 million in free cash flow, estimating it, because again, by the time this happens, maybe the stock price might get to it, considering there's a lot of eyes on it. So it's good to kind of see it, right? And this is non-SaaS revenue, because remember, for SaaS, we like to multiply it by 0.2, right? Not by 0.07, and definitely not by 0.05, given that there's higher gross margins. So if we were to do 35%, hello. If we were to do 35%, you can see a stock price of $27.28, which is synonymous to exactly what they're looking for in regards to the approximately $330 million plus that Vivek and Andrew Toy is going to share for the stock that has to be at $25 to $30 for 90 consecutive days by January 2026, right? But if we go ahead and grow it at Alignment Healthcare at 43%, you can see Clover jumped to $46.61. And if we were to grow it at Oscar Healthcare type, it's $53.11. So I'm going to say 35 right now to keep it at 27.28. But you can see the opportunity here. There's a lot of opportunity, and unfortunately, everyone in the market is like blinded. And that's just like how everyone was blinded at AMD, just like how everyone was blinded in Enphase or Tesla. You're going to have a lot of people that talk shit, and there going to only be a some that talk good stuff about it. And unfortunately, that's just how the world works. And then once it basically goes to 15, 20, and once it passes that previous high, if it gets to that position, again, no promises, then you're going to start seeing a lot of people say, oh my God, this was an actual business. Oh my God. And then they're going to FOMO in. And that's when we're going to take advantage of these people, because then we're going to sell it to them, because they don't know what intrinsic value is, and you people here know, right? So that's going to be pretty cool, right? That's what I'm giving you my game plan. And again, not financial advice, right? So interestingly, now that we kind of know this and kind of have an understanding here, let me think. So we got this, and so what else do I wanted to say? So pretty much that's what I wanted to kind of get at in terms of the free cash flow, because it's very exciting to see this. I don't know. I think that's all I have to say. You know what I mean? And just a quick shout out to folks. If you guys want to learn more about our stock terminal, there's a detailed stock terminal command documentation here where you can kind of scroll through all, the over 2.5 billion outputs that we have in regards to our institutionally graded data. You guys can get access either by subscription or lifetime access. You especially take advantage of the coupon code. Prices will increase, so definitely take advantage of this institutionally graded data we have. But overall, I'm looking forward to this. The biggest thing right now is the $6 trillion sitting on the money market fund side that's expected to come out into the stock market once the Federal Reserve decreases interest rates. I remember what I was going to say. So if you go to our research here, you can see that in terms of, I explained it here, but I'll just say it. And for some reason, we're starting to see an aberrative move in smart money. This is smart money versus dumb money. We talked about it before. It's good to important to see what people that have over $100 million are doing with their money versus what dumb money is. And dumb money is a nickname that Wall Street uses on behalf of retail investors. And we can see that since the May, I think, CPI report, we're starting to see an influx because the Federal Reserve, Wall Street realizes that inflation may be in the rearview mirror. And, interestingly, you can see that, since also in conjunction to JP Morgan Chase doubling down in Clover, it was also right after that March positive, $25 million in free cash flow that we saw. So there's a lot to look forward to in regards to Clover Health. And, this is going to be very interesting to see. Happy Sunday to you. Let's go. Shorts hovering around CLOV nonstop like dead animals wait until they get kicked in the balls. Yeah, honestly, it happens to even Nvidia and the Teslas and of the world. Just like there's a standard deviation, there's dumb people and smart people in anything. There's smart shorters and dumb shorters, and it's just kind of how it works. They hang around. They can hang around with us for the foreseeable future. We can definitely need a good 12 to 8. Yes, I agree with you. I agree. So that's all I have for you guys. I just wanted to basically point this out and kind of give you kind of what I'm thinking, because, for me, as of right now, this is not reality yet. They're not growing like this, but, for me, I'm not, again, not financial advice, but, I wouldn't, I'm not selling, right? And I wouldn't be surprised if this thing goes over $25, right? It's not, it's not out of, it's not far-fetched, right? And so that's what we're going to be monitoring, and that's pretty much it. So I hope you like this video. Hit that like button and have a wonderful Sunday. And yeah, guys, I'll see you on the next one. And happy Sunday.